You're seeing the national builders have to step back a little bit because they have shareholders to answer to. They don't have the flexibility to be a little riskier. If you can find what you believe are good deals, if you can get them tied up and you can get a little more time frame on the deal, I would be cautious about trying to deliver finished lots right now. But if you're talking about finished lots to deliver later in 26 and 27, I think that's a great plan.
Hey, what's going on, everybody? Welcome back to the Land Development Podcast. I am your host, Ryan Glick. We have an industry news episode for you today, and joining me, as always, is Charles Covey. What's going on, Charles?
Hello, hello.
So I think, one of the last times that we talked, I think I was telling you about the excitement we had in my house where we added a new puppy. So we got an Australian Shepherd, and he's been keeping us busy. And
Right. I think that there's some other additions.
Yeah, so we decided to make things even harder for us, and we went out and got a kitten. And this dog just wants to continually herd. It's a herding dog, so it just wants to continually herd the cat. And it's
you get a bunch of them and let it herd cats.
It's insane because he's herding it to nowhere. Like, where are you herding it to? It's just like he just has to get up and turn it. He just wants to keep turning the cat. And it's
wow, that is funny.
It's a work in progress.
Well,
so
they talk about herding cats. Like, apparently it's pretty difficult. So
yeah. Well, I'm gonna learn quite a bit about herding cats here. I feel like over the next couple of weeks till we get this sorted out.
That's really
funny. Man.
You've got a whole menagerie going on there. Next, you need like a snake and a lizard and some fish. Get a bird. Don't get a bird. They smell.
Yeah, well, I think if my daughter had her way, we'd have some other animals, but I think we're good. We've got our hands full the way it is, so we'll make do with
you got room in the backyard for a pony. Just get her a pony.
Yeah, right. I can't imagine. Well, we're texting back and forth about kind of what's been going on the last couple of weeks with in the land development industry, and there's a lot going on. There's a lot of conflicting news, or just some news that makes you think one thing, but then you see news that makes you think the other. And so today we're going to be digging into, Warren Buffett and his big investment his big bet that he put into Lennar and D.R. Horton. We're going to look at the numbers that were released from the Census Bureau from new construction, both new construction activity as well as sales for the month of July. Those were just released just a few days ago. And then we're going to finish up with Jerome Powell just had their annual meeting where he spoke about what we should expect or what we could expect coming up next month in the Fed's next meeting. And so we've got a lot of really good stuff we're going to dig into here today. And that takes us into the first article, which is going to be from the U.S. Census, which is the monthly new residential construction. This also includes sales data. So we're going to look at that first here. Definitely interested in getting your thoughts on these numbers, Charles, because it paints a different picture than, the big investment that was put out there by Buffett. But obviously he's thinking a little further in advance. So maybe that's what that is. First up is building permits from July 2025. So single family building permits at a seasonally adjusted 870,000, which is up month over month 0.5%, but down year over year 7.9%. Multifamily 2 to 4 units, 54,000 seasonally adjusted, and that is up month over month by 8% and up 1.9% year over year. And then the 5+ unit multifamily is at a seasonally adjusted 430,000 units, which is down month over month 9.9% and down year over year 1.8%. And then looking at housing starts, single family, a seasonally adjusted 939,000 units, month over month up 2.8%. And year over year up 7.8%. And then the multifamily is not distinguished between 2 to 4 units or 5+ units. So multifamily at 470,000 starts, month over month change of 11.6%. That's an increase of 11.6%. And year over year change up 27.4%. And then the last one here, housing completions, single family at a seasonally adjusted 1.02 million, which is up 11.6% month over month, down 6.1% year over year. And then multifamily at 385,000 units, down 2.8% month over month and down 28.8% year over year. So interested, before we go into the sales numbers, just interested if anything sticks out to you from these, permit starts and completions.
Well, I think definitely the single family 8% down year over year is not a surprise on the permits. The completions, I think, is really interesting. The starts and completions on the multifamily, I find very interesting. So we've got starts on multifamily going up, and I think that's just generally people have figured out ways to get some of those deals done, realizing, hey, we can't sit on these projects forever. So they're finding ways to get some projects done. Although if we dove into that, I think we would find that there's most of the projects that are getting done have some type of advantage, whether they're in an opportunity zone or it's low income housing tax credits, like all those kind of things are ways that they're able to get stuff done. The typical Class A multifamily is just tougher. Anyway, that one's interesting to me. Although you look at those completions are down year over year on the multifamily. I think single family across the board though down as we've heard ad nauseum.
Well, let's look at the sales numbers here. So sales, new construction sales, median sale price at $401,800, which was down 4.9% month over month, down 2.9% year over year. Average sales price at $501,000, which was down 2% month over month, but up 1.1% year over year. Sales seasonally adjusted 621,000 units, down 0.6% month over month and down 11.3% year over year. Then homes for sale inventory at 612,000. That's up 0.5% month over month and up 6.4% year over year. And then month supply of inventory is at 9.8 months, which is up 1% month over month and up 16.7% year over year. Thoughts on this, Charles?
I think most people want to see that at a 6 months or less, and that means things are moving and houses are turning, and you don't want to see stuff sitting for a long time. So I think that 9.8 months is, and with the trend upward at a noticeable pace, that's what's causing a lot of this concern in the marketplace. And I don't think that's. I think we're going to talk about this later. This is not long term systemic. Oh my God, the United States and its housing market are cratering forever. Of course not, but we're in a position of at least in the short to mid range until we see some relief on rates and we see the average consumer willing to do something in the housing market, part with dollars, then I think we're going to continue to see tightening of the belt, so to speak. And these builders are going to remain strong. I think Buffett's bet is a good indicator of what the American housing market is at its core. But I think in the near term, over the next 6 to 10 months, it's going to be a little tougher.
All right, well, let's move on to the next segment, which is from the comments. This one comes to us from Spotify. So comment from A3 is the name. I think that's when someone enters a comment but doesn't, maybe they're not signed in or something. I think that's a generic name. Comment reads, I'm a big fan of the show. However, I didn't personally see much value in this episode. The lack of understanding and pivoting to a knee-jerk reaction from the guest, suggesting raising the price of water to solve for data center concern lacked logic, substance, and awareness. I also anticipated more data-oriented discussion since the guest is an economist. I really like the show, and I've recommended it to others. This episode just wasn't for me. So this was in response to episode number 100 with Brian Kaplan, and honestly, I appreciate this type of feedback on these shows. I actually listen back to every episode, so I'm subscribed to the show just like all of you are, or you should be if you're not. And when they come out, I always listen back and see if there's different questions I could have asked in different spots and everything. I think the whole talk track around the data center, when I brought that up as a question, I don't think he fully understood it, and he really simplified the concern. So I definitely don't disagree with your with what the commenter here, what you think of that particular episode. I did get a lot of positive comments about it as well, though. So I think it just really depends. Like we try to cover a lot of different topics on the show, a lot of different types of guests to see what works. And I think there's probably a pretty good chance that you're not going to necessarily have 100% of the episodes be exactly what you're looking to learn. But anyway, appreciate the feedback. Keep it coming. You can make comments or shoot me a message directly. Either way, I love it and love you listening in and sharing it with people.
Yeah, that's great.
All right, well, let's go ahead and move on to the second article, and this one comes to us from Realtor.com. Headline reads, Warren Buffett's Berkshire Hathaway invests nearly $1 billion in home building giants. Berkshire Hathaway invested about $1 billion in U.S. home builders. Around $800 million went into Lennar, and about $191 million was invested in D.R. Horton. Buffett has not made major bets on home builders for years, making this move notable. The purchases were disclosed in Berkshire Hathaway's most recent quarterly filing. The timing suggests Buffett sees long-term opportunity in housing despite short-term affordability issues. High mortgage rates and tight inventory continue to pressure the housing market. Home builders like Lennar and D.R. Horton have benefited from limited existing home supply by capturing more buyer demand. Buffett's bet is being read as confidence that the housing market will stabilize and grow over time.
Something I meant to look at. Have you seen what did those stocks do over the last 3 or 4 months? Do you know? I would assume that based on sales and quarterly reports, they were probably trending down. That would be my guess. So I don't know if that's something you can grab. My assumption is that Buffett saw that trend down as a value opportunity for him to buy them at maybe a perceived discount. Maybe he thought that potential trend down of the stock price and how that aligned with earnings and future earning capability probably gave him an advantage due to the timing.
Yeah, I was just looking at it here, and for Lennar, you're looking at their stock. It looks like it was trending down over the last 6 months or so, and it starts to have a big uptick in right around August. Starts to go up right around August 11, and again, so I think I'm not sure when the earnings call was for Lennar, when the
Mm-hmm.
earnings call was, but yeah, it definitely had been trending down though
Yeah.
before
I
this.
wonder, it'd be nice to know if he bought this pre that August uptick. If this is a quarterly report that we're hearing about now, my assumption is this would be probably a June or July purchase, would be my
Mm,
guess.
yeah.
I think something that's very interesting about Buffett and Berkshire Hathaway is that they're not afraid to sit on cash. So he's not one like some firms, like they do not sit on cash. Once it's sitting there, they're going to deploy the shit immediately, whatever it takes to get it out the door. And he's not demonstrating. In fact, I think he's sitting on maybe 300 billion at the moment that he's could deploy. No, 100 billion. Anyway, some crazy number I saw the other day. So he's sitting on a bunch of cash. Doesn't have to deploy it, and has never indicated that he's scared to sit on cash. But for whatever reason, this was a value to him, and so it wasn't like he needed to do the thing. He felt that this was a good value, and for reasons that we think indicate not only his confidence, but I think a lot of people's confidence in the overall housing market. We are still dramatically underbuilt. I think there's 3.5 million units short, something like this, and that's not going to change anytime soon, especially with the reduction in starts that we're seeing. So 26, 27, probably great. End of 25, early 26, probably a little bit tough. I think we're seeing that across the board. I know of a bunch of people in the Dallas Fort Worth Metroplex. We're seeing cuts, especially with on the acquisition side or things that are perceived as maybe not necessary right now or not directly correlated to money this quarter or next quarter. I think some of those positions are getting cut across the board just to try to keep things lean and mean because, and that's a tough position. They've got to answer to investors, and these have to be a good earnings call every single quarter. And that's a maddening position because you really would like to be able to maintain those staff until you hit that upswing again, because then you have all those resources, and you can make things move faster. Now they'll have to rebuild some of those teams later, and that's just unfortunate. But the nature of that world when you're a public company is you've always got to have a good quarter every quarter, some way, somehow. And so they're cutting costs wherever they can to try to keep things propped up a little bit. It'll come back, and I think that we'll see things much better towards the end of 26.
Yeah, my thought was with this is that there's demand for the housing. People can't afford the housing, or they're waiting for something to happen with rates. And I think there's an expectation, or I think from most people, there's an expectation that rates are eventually going to come back down to some sort of whatever their new normal level is. Maybe it doesn't happen this year. Maybe next year it's slow again, but at some point it's going to happen. And knowing that Buffett does invest for the long haul, Like he's not, he's investing looking out into the future, that he sees that there is demand out there and people will eventually be able to afford these, I would guess. I hope he's right. I mean, I hope this bet is an accurate bet, because I think as an industry, we want to see some of these homes be able to be more homes sold to people who want homes. And we want them to be able to afford those homes. So, and that's the next topic we're going to get into, is interest rates and what might happen next month. But anything else on this one before we jump to that next article?
Yeah, I think another element here is that it seems like, at least from what I've heard, the reduction in staffing and the reduction in dollars going out tend to be on new lots in the pipeline. I think that the pipeline that they have is sufficient. They don't need to stack pipeline. They don't need to stack lots quite in the same way they did over the last couple of years. And so I think that they're looking out 3, 4, 5 years. Hey, we're probably in a pretty good position. Hey, we probably have access to enough lots or close to it. Or hey, we've got these land banking opportunities. A lot of them has been a lot of time over the last couple of years making sure they had relationships. We've talked about this before with D.R. Horton and their land banking arm, with 4-Star. So that everybody, all of them have a scenario where they've got lots kind of stacked away, and that 2, 3, 4, 5 year pipeline is being handled. So it seems like they feel pretty comfortable with that pipeline. We are hearing about, some near-term deals that they're maybe walking away from, and stuff that they're not closing on right now. Maybe it's finished lots that they're not taking right now. Maybe they're kicking that can down the road, or walking away altogether. So maybe near-term pipeline, they feel they don't need as much, but I think they're probably pretty confident what their pipeline looks like 2, 3, 4, 5 years out.
I was able to find that there was it looks like about a 5.8% increase of Lennar, a bump in their stock price. And then D.R. Horton was right around 4% increase in pre-market activity. So that news did cause people to kind of shift the stock briefly. So there was some movement that happened there after the news was announced. I don't see when the announcement was actually made, though, as far as when that happened.
I think I saw it maybe a couple days ago.
This episode of the Land Development Podcast is brought to you by Groove. Groove is known for its powerful land acquisition and deal tracking tools, but what really sets it apart is the service. From personalized onboarding to fast, reliable support anytime you need help, Groove makes sure land professionals never feel stuck or on their own. If you're unsure if Groove is right for you, schedule a demo at letsgroove.com/demo. That's letsgroov.com/demo. All right, let's get back to the show. All right, well, let's go ahead and move on to the next article here. This one is actually a video that comes to us from CBS. Headline reads, Fed Chair Powell teases lower interest rates. So this is going to be a video that we're going to play here. It's about 3 minutes long, and then we will react.
Wall Street and the White House had their eyes on Wyoming Friday. Speaking at the Federal Reserve's annual symposium in Jackson Hole, Chairman Jerome Powell signaled the central bank may lower interest rates. His remarks kicked off a market surge. The 3 major stock indexes all gained more than 1.5%, with the Dow closing at a record high. But Powell also hinted that there are risks ahead for the U.S. economy. Willie James Inman is at the White House with more. Willie James, good morning.
Michelle, good morning to you. Federal Reserve Chairman Jerome Powell gave the clearest indication yet that the benchmark interest rate may be cut next month, but he warns there's still a lot of uncertainty for the U.S. economy.
Jerome Powell's comments at a gathering of economists in Wyoming could be welcome news for consumers looking to borrow money.
The shifting balance of risks may warrant adjusting our policy stance.
The Federal Reserve has not cut rates since December of last year. Members of the central bank will meet next month. Powell's comments also came with a dose of skepticism about the U.S. economy, following a weak July jobs report and continued concern over President Trump's tariff policy.
There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be.
President Trump has repeatedly criticized Powell and called on the central bank to lower interest rates, something Powell says the Fed will decide independently.
Well, we call him too late for a reason. He should have cut him a year ago.
Meanwhile, this weekend, America's second largest trading partner, Canada, says it's backing off of retaliatory tariffs on dozens of products covered under a trade agreement between the U.S., Canada, and Mexico.
Canada and the United States have reestablished free trade for the vast majority of our goods.
But Canadian tariffs on some U.S. goods like steel, cars, and aluminum remain. Earlier this year, the Trump administration put import taxes on some Canadian goods, claiming Canada has not done enough to stem the flow of illicit fentanyl across the northern border. Canada retaliated with a 25% tariff on some U.S. goods.
He's removing his retaliatory tariffs, which I thought was nice, and we're going to have another call soon.
This month, Trump hiked tariffs on Canada to 35% for some imports. Some business leaders hope this easing of trade tensions between Ottawa and Washington could open the door to more negotiations.
And the commitment to talk again soon is music to the ears of the business community, because we know good things happen when the leaders are talking.
Does Jerome Powell wear the same suit and tie every day? The same gray suit and kind of dark colored tie in all these photos.
Yeah, well, it seems like it. Yeah, it's his look. It's like, hey, I can't knock it, because you know what? For people who watch the actual video episodes, dude, I'm always in a black T-shirt and a baseball cap. So you know what?
And did you see Trump's hat in the video?
I did.
It doesn't say "Make America Great Again." It says Trump was right about everything.
Yep. It takes some confidence to do that.
That's some confidence.
Yeah,
he does not lack confidence. We'll give him that for sure.
Yeah, well, from what I've read, I think earlier when we were talking, we thought that maybe there could be as much as like a half point cut in September. Yeah. But from what I've been seeing, it seems like most people are, or at least they're looking at more of like a quarter point.
It sounds like the market is pricing in a quarter point. I think a half is great. I think they're going to have to do something. So I think that's probably the route, probably a quarter point. There are some bigger factors at play here, because we've got the general amount of money available in the marketplace is drying up. There's an extreme lack of liquidity, and they're going to have to make a move. So quantitative easing, reducing the rates. I think we're reaching a point now where just to make the conversation about inflation, I think is too one dimensional. There's too many other factors at play. And so it looks to me like there's starting to become enough data to where they really can't spin this any other way. They have to make a move.
Yeah, and it does look like September 16 and 17 is that next Fed meeting when the decision will be made. And again, there's some who think quarter point, some that think a half point. But yeah, we will likely see something that comes out of that meeting coming up here in a few weeks. Well, that brings us to the end of the articles that we had. Any final thoughts, Charles, before we wrap up?
No, it's been an interesting year. It's like so many things at play that affect us in such a dramatic fashion in business. And we're right here watching it all. I'm just really curious, will we look back in 5 or 10 years to this time, and how will we remember it? So that's something I've been thinking about lately. What do you think? What are we going to look back at 2025 and all the things that are happening geopolitically and in our country? What are we going to look back and think about?
Yeah, I can tell you, I think that the businesses out there, that the developers that are out there and are not taking their foot off the gas, like now these big companies, they've got a big cruise ship that they're trying to navigate, right? And so they can't make changes as quickly as some of the smaller developers out there. But I think the smaller developers that are continuing to look for deals are continuing to look for land where, people are going to want homes. And so there's not necessarily an oversupply of homes in every single market. There's markets that are still in need of homes and everything. So I think there's still a lot of opportunities for developers. And I think when I look back on this, I think we're going to see a lot of developers who really had a lot of progress in their companies at this time, when a lot of people are taking their foot off the gas and just waiting.
Absolutely. I agree. Like, there's absolutely great opportunity right now, because you're seeing the national builders have to step back a little bit because they have shareholders to answer to. They don't have the flexibility to be a little riskier. And so if you can find what you believe are good deals, if you can get them tied up and you can get a little more time frame on the deal, I would be cautious about trying to deliver finished lots right now. But if you're talking about finished lots to deliver later in 26 and 27, I think that's a great plan in these major markets that we all work in, where we see growth. And then a lot of the smaller to mid markets that are growing, there's a bunch of them across the South and some through the Midwest that are growing at a surprising rate because people want to be there. I think there's a lot of opportunity in those. and a forward-thinking developer can really make money putting deals in the pipeline right now that they'll be able to cash out in 26 and 27.
Well, yeah, we've got a lot of stuff we're going to be continuing to talk about and watch and see what happens. And as always, we appreciate all of you tuning in and listening to the show, and keep the feedback coming. And I haven't asked for a while, but if you have not left a rating and review on Spotify or on Apple Podcasts, it goes a long way in helping the show get in front of more people. The show just continues to grow, which is awesome. And that wouldn't be possible without all of you guys sharing it and all the support from all of you across social media and just, when you reach out directly and everything. So we really appreciate it. And that'll be a wrap for this episode. We will talk to all of you tomorrow.